Hi, good morning. Good morning, everyone. We're just kicking off this expert panel today on titled An Embedded Finance in Asia, an Embedded Finance Future in Asia, brought to you by Capron Asia and Thought Machine. So welcome and thank you for joining. My name is Ben Heckscher. I'm from Capron Asia and I'll be moderating the discussion today. And before we get started, I'll just go through a little bit of housekeeping to make best use of our time. Firstly, let you know that this session is being recorded. There'll be a replay of that sent out to everyone who's registered for the session, so you'll be able to watch this back at your leisure later. The session today is in listen-only mode, so if you're a participant, you'll be on listen-only mode. However, we want to keep it as interactive as possible, so there is a chat function, a Q&A function down the bottom of your Zoom link. So please ask any questions you've got there as we progress through the discussion. We'll try and answer as many of those throughout the next hour as we can. If we can't get through them, we'll send you an email afterwards. We've got your details, so we'll send you an email to that. And then next, Capron Asia and Thought Machine are bringing this panel together as part of another piece of work where we're writing a white paper on the topic of embedded finance. And so that'll be launched in the next few days as well. So that complements the panel today. And I suggest that you have a read of that when that comes out in a few days. So without further ado, I'll introduce our panel and then I'll just say a few words about what embedded finance is and set the tone for the discussion, and then we'll launch into things. So as I said, this panel is being brought to you by Capron Asia and Thought Machine. So from Thought Machine, we have Andreas Neidhardt, who is the head of sales engineering APAC for Thought Machine. And Thought Machine is a financial software company building next generation of financial software for banks and other financial institutions. We've got Sachin Sharma, who's the Chief Product and Operating Officer and Commercial Officer for Standard Chartered's Nexus, which is the banking as a service part of the Standard Chartered Group. And we have Rohit Khatri from Boltec, who is the head of insurance exchange at Boltec, and Boltec is an international insurtech company. And Rohit's joining us today to give his insights on insurtech. So quickly, I'd like to define embedded finance because it's sort of a word that we hear a lot about, or that's thrown around a lot, but what does it actually mean? So let's define it quickly, and then we can get into the discussion. So when we talk about embedded finance, it's really a service which provides access to financial or banking services through a third-party app or platform. So essentially it allows you to do banking or it gives you access to bank data without going to a physical bank branch or using a banking platform. And so that's really the topic. That's the topic of embedded finance. And it's certainly gaining traction here in Asia, and we want to lift the hood on embedded finance and find out a bit more about it and where the opportunities might lie. So I'll start with Andreas from Thought Machine. Andreas, before we launch into some of the use cases with Sachin and Rohit, I wonder if you give us some overall thoughts on the potential for embedded finance here in Asia. What's missing today? What geographies might have the most potential, or anything else you want to add, Andreas?
Hey, Ben, thanks for having me. So I think if we talk about embedded finance, we need to take a look at embedded finance and banking as a service globally and what the opportunity is that is behind of that. If we can trust some of the research that has been done by research agencies, there is opportunity or potential for reaching a total revenue size of more than 358 billion by 2029 in terms of embedding finance into the daily processes of consumers and small and medium-sized businesses. When we take a look into Asia, I think we are kind of like a step ahead of the embedding finance into our kind of like daily use, because if we look at For example, going through Singapore, there is like QR codes that you can use to do your payments for coffees. You can actually get buy now, pay later through e-commerce platforms, super apps like Grab, We Group, and others offering financing options through their kind of like integrated processes. So the opportunity that I can see here for Asia in particular, in terms of geographies or opportunities in general, is I think beyond going the consumer and looking into the daily processes and requirements that small and medium-sized businesses have, where we basically can use embedded finance and financial services that can be integrated into things such as like HR processes, that can be integrated into things like ERP and financing of invoices and assets and others. So this is where I see there is a huge potential, and I'm looking forward to see that happening in the future.
Yeah, interesting. Your last point there on it being used for SMEs, and I think that's a common theme that I found when researching the paper, that there's sort of a sense that there's maybe a gap or an opportunity in the SME market. Also, perhaps financial inclusion and in some of the more disparate parts and rural parts of various countries, which I guess Sachin can talk more to shortly. So maybe we'll move into some use cases. And Rohit, really, I'd like to understand some tangible use cases that you've implemented at Boltec. Maybe talk us through a couple of use cases or that you think are interesting, and how has it really changed the client experience in a profitable way for the company, and also how it's helped a third-party application or platform improve its brand.
Sure, thanks, Ben. I would start by sharing a perspective on the embedded finance definition that we started the discussion with, and the embedding goes beyond just embedding into apps. It's probably the way we are looking at it is embedding it into customer journeys. Now, those journeys could be happening on apps, of course, all the examples that were cited, but could also be happening in offline forums and culminating on apps, or starting from apps and culminating on offline channels, so on and so forth. Now, to give some examples, right, where from a perspective of embedded insurance per se, we are working with partners and case studies like with Samsung, with Home Credit, with Maya super apps, and of late even with someone like Yale, which is a home solutions, a smart lock solutions company. And what we are doing is we are embedding tailored insurance coverages, starting with that in customer journeys, to, if necessary or appropriate, embedding entire choice marketplaces in some of the partners' ecosystems. And let me elaborate a bit more about the specific names and examples that I took. For example, with Samsung, Boltec enables the Samsung Care proposition, which is our hero product, device protection embedded into the purchase of Samsung flagship phones. Now, what this does is it enhances the value proposition, Ben, as you were alluding to, for the OEM, but also brings protection coverage to the consumer at the time of purchase. So it's embedded into the customer journey. Another example is someone like Maya, super app in Philippines, where we've embedded certain products, but also something like a buyer protection, which is embedded into online purchases that are happening through Maya's platform, but also created a few curated products on a marketplace where customers can buy health insurance, so on and so forth. So a couple of case studies to and elaborate on how it can work in different manners, embedding into customer journeys, singular products, or presenting choice.
So how does that work? Say, for example, Samsung. Is this like I go to Samsung to buy my phone, it's $1,000, and then at the time of purchase, there's an option to add on for $5 or whatever the price is to insure that product. Is that sort of the solution that you're embedding?
Broadly speaking, yes. So the customer journey could be happening at many places. It could be at their own store. It could be happening online. It could be happening through third-party websites. And the customer is presented a choice. For some flagship models, it's offered by the OEMs.
Right.
For other
Okay.
models, it's available to the customer on a choice basis.
Okay. Yeah. And so then you get the client when they're sensitized to the product and they're thinking about insurance, and okay, you can buy it now. Interesting.
That's good.
And Sachin, like similarly with you, I know Nexus have an arrangement with Bukalapak, the large Indonesian e-commerce player, and you've rolled that out relatively recently. I wonder if you could talk to us about that in a similar term to Rohit there, and that and how that came about, and how both parties can benefit from that.
Yeah, first of all, thanks Ben, and thanks Capronatia for having me on this panel. This is a space that me and my team have been working on for the last 4 years, and I think what Rohit and BoardTech have done for insurance, that is something that we want to do for banking products now, right? So that's what SC Nexus is all about. It's a banking as a service platform, primarily focused on embedded finance use cases. So it's something which is which is very close to us. Now let me just talk about Bukalapak, and let me give some examples again from a banking product point of view. What does embedded finance really mean, right? So let's take a simple example. 10 years back, people would get a phone call from a bank and say, "Hi, Ben, would you like to take a personal loan from us?" Right? And Ben might be, sitting in the middle of a meeting. He might be, not thinking of any reason why he would need cash at this point of time. And he would get this offer pretty much out of context. And once, let's say he decides to take up the offer, it would be a pretty clunky user journey for Ben to, download some kind of a form, fill it up, put in some income documentation, send it to the bank, maybe go and meet an officer, do a KYC, and then wait a few days for his loan to get approved, right? Now, what's happened over the last few years, there is a tremendous amount of regulatory and infrastructure improvement that has happened across multiple markets. There is tremendous amount of data which is available across telcos, e-commerce, different retail ecosystems, and banks have now an opportunity to offer the same service but much more contextually and much more in a much more friction-free way. So now let's say Ben is actually on a online travel site, and he's planning his holiday with the family, and he says, it would have been great if I could have split this $10,000 holiday into maybe 6 installments. And there you go, right on that travel site, he has an option to say split into installments. Fantastic. He doesn't need to go to the bank. He doesn't need to talk to a KYC officer. He doesn't need to submit his documents. He doesn't need to wait for a few days for that installment to get approved. It's happening contextually, and it is happening in a very, very friction-free way. So that is that's an example for embedded finance. And the same thing can happen, like Rohit said, for insurance, right? I'm buying a device and I'm worried about what happens to this device if there is water damage, or if it breaks, if it gets stolen. And that's where the insurance is right there. It's available. And I don't have to go and really look to solve this requirement for myself. It's there. And I think that's the power of embedded finance. And from our point of view, this is going to be a massive category which is going to grow. Now, coming back to what we are doing with Bukalapak, Bukalapak is a very large retail e-commerce marketplace. It has different user groups. It has the buyers on the platform. It has sellers on the platform. And it has also a very large network of small stores, mom and pop shops, as we call them, which are supported within their ecosystem. And we are starting with solutions for their buyers, which is essentially starting with a value proposition around a debit card and a savings account. And then we will progressively move on to installment loans, revolving credit, and even at some point of time, cash loans. So that's the partnership that we have. And like I said, we are starting with the retail users, but the potential is much larger to go into the seller ecosystem as well as the shops.
So basically what that means in Bukalapak case is that when I'm doing I'm buying my groceries on Bukalapak, that there's an option there somewhere that I can even open a debit card through a sister app or a savings account through a sister app without having to, and you can do the KYC online and all the rest of it, and simply there it is.
Absolutely.
Yeah. I think that the key takeaway for me from that, Sachin, is, and it's a bit like what Rohit was saying, it's contextualized so that the selling is happening right when the customer wants it, and not in some abstract fashion where you're getting a mail out or something of the sort, or an email or a text message. And I think that context is really key to the proposition of embedded finance. I think that's a key takeaway. And then Andreas, I'll come to you. Is there a way that a company can use embedded finance, and maybe Thought Machine can help them build an embedded finance solution? That's one thing, but then maybe it can help the company with a wider development of its IT infrastructure, perhaps, and move more things into this sort of sphere, and help them develop maybe onto their cloud platform. You build a cloud proposition with embedded finance, and then you can sort of leverage that into other parts of the business.
Yeah, so I think technology companies like Thought Machine that follow kind of like a modern design and architecture principles, where you have like distributed technology following kind of like microservices technologies and architecture with an API first principle, obviously is on the forefront of kind of like enabling banks and their customers to embed and implement financial services and their products into the kind of like user journeys that are required. But I would like to tap into what Sachin just said as well, because obviously one of the key benefits of Thought Machine and providers like us is that you can create financial products within our ecosystem that are kind of like highly targeted to the consumers, because you can create them in a hyper-personalized way. By embedding your financial services into kind of like ecosystems that traditional banks have not been able to access so far, you obviously are tapping into a vast amount of non-traditional data that financial institutions don't usually would have access to. You know, like you suddenly have access to the kind of like e-commerce purchase history. You have access to kind of like potentially HR data, salary information. You have kind of like employment information and history and other things. So by using all those kind of like different and alternative data sources, you can feed that information into technology companies like us and create those products that are basically targeted to the customer themselves and not to the segments that they are serving anymore.
Yeah, that's a nice way to think about it. And not just data. I mean, of course, data is one thing that's great to have, but using APIs and an open banking framework, I suppose, to really hyper personalize services. So, and I guess in the insurance world, Rohit and I talked about it some time ago, but you can really target the exact price, the exact coverage needed, really develop the product perfectly. And I think we'll touch on that a bit later as well. But sorry, Rohit, yeah.
No, yeah, let's cover that when we get to it. But you're absolutely right. When Andreas mentioned about APIs, the power of APIs in contextualizing and tailoring the coverage, is very powerful.
So I'd like to sort of talk on where we are now, the reality of where embedded finance is today, because we have a bunch of solutions, and as Sachin said, he's building out some great current accounts and a full working service account for customers on Bukalapak. But the reality of today feels a bit more muted in that the services on offer are really around payments, FX, perhaps. Buy now, pay later is a big name, and then of course insurance. So whilst we would like to have the industry move and evolve into more sophisticated areas, maybe today, Andreas, do you think we're still at the beginning of the journey?
Yeah, so I certainly think that we are at the beginning of the journey. I mean, we all know like buy now, pay later is the most prominent and widely accepted kind of like version of embedded finance at the moment. But Thought Machine has been working with customers and prospects, not only in Asia, but also in North America, on a number of very interesting use cases I would like to share with you today. So for example, customers across Asia, we've been working on asset and invoice finance user journeys. So imagine as an enterprise, whether it's like a small, medium or large enterprise, you basically have a continuous inbound of invoices and other requirements that are being registered automatically within your ERP application. Traditionally, when you go to financial services institutions, like requesting like financing options for those is a very manual process. You need to provide documents, you need to have manual confirmations and approval processes that take sometimes days and weeks to process until you get the funding dispersed into your account. We are working with those prospects to see whether we can integrate our APIs and products into those ERP applications directly, so that there is automated workflows when invoices are being registered, that they can be automatically financed against the amount, so that these processes are highly automated and accelerated. We are also working on some opportunities where customers have asked us to look into like how we can offer alternative lending services to their integrated solutions. For example, a very good use case here would be those kind of like solopreneur shops that are vastly being used in Asia, where you have POS devices, and those businesses require kind of like short-term loans or financing options, for example, to purchase the next batch of iPhones or whatever they need to sell within the market. So very often those kind of like enterprises don't have a kind of like very steady workflow, very steady cash flow, and the financing options that are being offered by the banks are kind of like difficult for them. So we've been working here to embed financial products into the workflows where the repayment of such lending products is based on the cash flow that they have on the POS device. So instead of having a regular daily, weekly or monthly repayment, you basically repay a percentage of your cash flow into that loan until it's being repaid entirely.
And also, I think on some of those, in a similar way, I think Tokopedia in Indonesia have a proposition where they do basically supplier financing on their platform. So and it's secured, and they can disperse the loan use an algorithm based on the turnover of the product and those sorts of things. So that's another use case, I suppose. Sachin, how are banks reacting to all of this? I mean, I know obviously Stan Chart is being proactive with Nexus and yourself. And Westpac in Australia has a banking as a service model. But what about some other banks? I mean, the proclivities of the other banks seem to be a bit more wait and see what happens, and not yet. Or what's your sense here?
Yeah, so I think most banks haven't, at least in this region, haven't really come up with a strategy around embedded finance or banking as a service. So I think, I mean, to be very bluntly honest, right? Many simply don't understand what's happening. What is the opportunity? Many who do understand, like you said, want to kind of wait and watch and see what's happening. There is also a factor here where you need to consider what is the shape of that bank in the specific market. So, for instance, if I'm a top 3 or 4 bank in the market, I have 20%, 25% of the market share, let's say in retail lending. The first thing that I will worry about is cannibalization, because the moment I embed some of my services into let's say a partner ecosystem, there will obviously be some kind of a commercial arrangement between the bank and the partner. And therefore, the top players from a balance sheet point of view will be a bit reluctant to kind of get into this space. But what I would say for everybody else is that if you are let's say a sub 1%, 2% market share bank, then this can be a very real opportunity to scale your balance sheet at the back of your existing license. Essentially working with partners and embedding your services in your products contextually in the right user journey, right? So I think there is mostly banks are slow up till now. I think when they start seeing some of the big use cases being launched, then some people are going to get a little bit more serious about it. So I can tell you that my phone hasn't stopped ringing since we have announced Bukalapak. Every day, somebody from my network reaches out to me and says, "Hey, how are you guys doing this?" And what's under the hood. So there is a lot of interest which is getting generated as we see more of these use cases in the Asian markets. The interest is definitely going to pick up.
Your point on cannibalization, I mean, I guess it's a classic case, but I remember Steve Jobs famously saying about the iPad and the Mac that if you don't cannibalize your business, someone else will. And I guess that's the kind of the way it is, and you hope that you can leverage the new platform to be more efficient, more profitable, and all the rest of the things. But I guess interesting observations there. On the Rohit, I wonder. Sachin touched on it there about profitability of the products, and I wonder how many of the products today are genuinely profitable for both the providers or are they more profitable now that the systems are more efficient, or your thoughts on that?
So my perspective on this is the nature of the P&L associated with embedded products and distribution when it comes to insurance starts shifting a little bit compared to traditional products and distribution. The traditional products distribution typically has huge significantly large distribution costs from a perspective of traditional channels, agents, banker partners, so on and so forth. When it comes to embedding products, of course this starts coming down, but the technology costs then start rising because you are doing more technology integration, the API setups, the tailoring and customization of the products, so on and so forth. So there are ways in which we can design products in a manner. When I say design, I say commercially designed products, the pricing, so on and so forth, that the P&L can be still secure. And of course, technology gives us the ability to, on an ongoing basis, adjust the pricing, the economics as the actual incidents happens.
Interesting.
So
Sorry, don't.
I think the profitability of embedded insurance is looking bright. In fact, when we talk about the scale at which this is growing, at the moment it is a global estimate of the embedded insurance market sizes in range of about $150 billion in premiums, and this is just a fraction of total insurance premiums written annually in the world. But this is projected to grow to roughly $750 billion in premiums by 2030. So I think the market's automatically moving in that direction, knowing that this is not only fast growing, it's consumer friendly, but it's also can be profitable.
Yeah. Interesting observation you make there that the tech costs go up. I mean, it's not all one-way traffic, I guess. Sure, you've got
a great product. Catch that?
Yes.
I'm
yes,
sorry,
yes. Yes.
I'm not sure whether my
No, your screen went off,
internet
but
connectivity
sorry,
is-
your screen was frozen, but we can hear you fine. Your observation.
I would like
Sorry, go on,
I would
Sachin.
like to also give the the point of view of the bank here, right? Because this is a very fundamental question. We are not just going after a potentially fast growing segment of embedded finance, but we are also very clear that this growth has to come with profitability. And I'll explain how this kind of works really well from a bank's point of view. So if you look at retail banks across the region, especially those who are still working with legacy stacks, technology stacks, there is a massive challenge in customer acquisition cost as well as the customer maintenance cost, for at least for the retail segment customers where the ticket size is very low. And that's why you have situations like Indonesia, where you have 60 million adults who are using smartphones, who are using e-commerce, but they don't have banks with offering them proper services. Simply because for the bank, despite the ability to reach this customer, the ticket size will be very low, and therefore the bank is really not interested in giving them their services. So this is a very big problem, and at the same time, it's an opportunity which can be solved with embedded finance. But banks really need to do two things here. One is that have the right partnerships where essentially the partner is acquiring for the bank, and therefore the bank is completely getting rid of the acquisition cost, which is a massive component for the retail bank's cost. And the second thing is that for the onboarding and maintenance of this customer, the bank does need to invest in a scalable platform, which is going to give them the economies of scale, which has the right architecture, which has none of the legacy costs associated with it, right? And I think Andres also alluded to this, that you cannot do this business with with something which is installed on a mainframe. You will have to go in for a modern microservices APIs based architecture. And if these two are done right, then the banks will be very well positioned to grow in this segment, build their balance sheet and build it profitably.
Excellent. Yeah. All good stuff there. All interesting points, Sachin. Particularly, acquisition cost is particularly in Asia is always a problem. Like you said, with small ticket sizes, and hence scalability is key. And that was a common theme when I was researching the paper. And actually, I was going to ask Andreas about that shortly. But scalability, yes, all of these things are critical to the product development and platform development. Just before we get to that, I want to go back to Andreas and ask a little bit about buy now, pay later, because of many of the use cases, the embedded finance use cases, as we said, it's been by far the noisiest and the one that is on the front page of the papers more than anything else. And particularly cases like Afterpay in Australia, which sold for a large amount to a year ago. But of late, there's been relatively mixed success for buy now, pay later. What's the future here, do you think?
Yeah, so I guess, it really makes sense to relate this what Sachin was saying, because I think we've seen a multitude of different kind of like buy now providers in Australia, in Asia, but also globally, that have been kind of like growing at the cost of profitability. If you're taking a look into Klarna, for example, who has been reporting amazing growth numbers year on year, but the profitability has never been able to catch up with those growth numbers. And eventually what we can see as a return of that is that the business is now starting to decline for them, and investors are starting to actually demand seeing returns for the investments that they have made. So I think that is in general the issue with those kind of like fintech companies, that they eventually try to grow at a cost that is becoming dangerous for them. I think when we take a look into buy now, pay later itself, I mean, there is obviously it has grown almost to kind of like a cancerous kind of like state, because it has taken over from like an e-commerce purchase option into like every part of your social life can be kind of like financed now. I've seen buy now, pay later providers in Australia that basically say drink now and pay later, and other kind of like things that is in the market. And eventually that basically drives the consumer debt itself of the population. So I think regulators, same as banks, have taken a while to recognize this new trend, but now are starting to pick up and drive regulation around those topics. I mean, we have seen MAS announcing like guidelines around the kind of like code of conduct for buy now, pay later, and other regulators globally picking up that kind of like tune as well. So what does that mean for the buy now, pay later industry? I think it means that innovation that has been basically around kind of like a certain segment of users that are not able to pay back their credit on time is not going to continue, but I think it will be more like a stabilization phase where we see a lot of those providers consolidate, and then maybe banks are starting to pick up that service as well.
Yeah, drink now, pay later. Hey, that's an interesting concept. And
Ben, this is Rohit here. Sorry, I was having a bit of a patchy internet. Just checking whether my answer came through for the question that you had asked around.
Yes, all good, Rohit. All good, Rohit. All good. Sorry, Andreas, your comment there, I think, and it was a bit like what Sachin was saying about profitability, and it's one thing to grow. And I guess you've all sort of said the same thing, that it's one thing to grow, and it's easy to sell insurance cheaply, or it's easy to sell personal loans cheaply, but to do it profitably, well, banks have been trying to crack that nut for 200 years, and so to build a smooth platform is one thing, but you still need to have the fundamental risk management systems in place.
Yeah. So Ben, let me also just give just add to what Andres said on buy now, pay later, right? And I think his statement and about drink now, pay later kind of sums up the problem of this industry, which is essentially you are lending irresponsibly, honestly. And I drink now and I forget later. So I don't even want to pay you back anymore. And that's obviously going to impact the profitability of the buy now, pay later company. So from our point of view, we never really looked at it from a product structure or profitability, the way the fintechs are looking at it. We applied all the banks' responsible lending principles. And we also do comprehensive risk assessment. The difference is that we don't ask the customers to produce all these income documents. We use data which is digitally available, either from the partner platform or from the bureau or from the telcos. Now they have a score. So the experience is the same of the customer, but the actual risk assessment is much more robust. And also therefore the profitability of the product is also expected to be much more sustainable. And I think regulators are going to step in terms of what some of the fintechs how they are promoting these products, and there is going to be a consolidation and a correction in this industry.
Your point there, Sachin, about the ease of giving the loan without mountains of paperwork and all the rest of it. That's something that I think is a key benefit here. The simplicity and as Rohit said, the frictionlessness or the reduction of frictions in the whole process. And maybe Andreas, this is one thing that you touched on earlier in the introduction about financial inclusion. So if you have not so many of these frictions, and you have access to data, you can provide services to customers who wouldn't otherwise have been able to to have the financial services in rural places, in rural Indonesia, India, Philippines, or wherever it might be in Asia. And to that end, I wonder if you see how it might be developing differently in Asia versus Europe and North America, for example.
Yeah, so I think there is a few things that make us different in Asia to the rest of the world. So first and foremost, as you rightly point out, I think 6 out of 10 Southeast Asian countries are considered to be underbanked or unbanked, whereas I think the adoption of mobile phones and access to internet is comparable, fairly high. I think it's above 90% for certain countries. So that basically opens up an opportunity to provide like alternative kind of like banking services to those kind of like population in those different markets to drive financial inclusion. And I think embedded finance will continue to drive those because super apps are on the rise. There is kind of like applications that offer various different kind of like services, whether it's kind of like ride hailing, it's like food delivery, it's insurance, combination with kind of like financial services, and they will basically be ready to give that kind of like financial inclusion or increase the financial inclusion in those countries. I think the digitization of financial solutions into those kind of like daily lives of those populations will have the most significant and positive impact for financial inclusion, which is the enabling of fast, low cost and convenient identification and verification processes, because you're already authenticated against the app and the services that you're using. And it will then create a momentum to enable electronic payments to support the supply side kind of like business cases.
Yeah. And I guess in Asia, like you mentioned, the super apps is more prevalent. They're more prevalent in Asia, and the use of them is more prevalent. And it's sort of skipped a generation, whereas everyone is banked in France or Germany or Australia typically. Whereas, and so I don't need a super app, but there's no need for me to open a GCash wallet. So you can almost skip that.
Yeah, I think the adoption and the acceptance of such services in Asia is much higher than in Europe and in Americas. I think in those countries and regions, people kind of like trust their traditional bank a lot more than those kind of like fintech providers.
Yeah, okay. And that sort of acceptance and it sort of moves us into the product development stage, because then you can sort of develop your products accordingly. And with that product development in mind, Rohit, I remember you telling me that it's very rare that someone wakes up one fine day and says, today's a fine day to buy insurance. So, okay, but when I'm buying a product, then I've been sensitized. So maybe talk to us a little bit about how the right time and the right place can be enhanced in the selling process, and when you're what you think about when you're developing an embedded product.
Sure. I think you gave an example from something that we were discussing earlier. Right? Nobody wakes up thinking of buying insurance today. And that's because typically insurance, is associated with risk, with the potential of loss. So there's always a negative emotion that is associated with it. And the way Sachin was earlier alluding, right, that let's say the last decades or last century's typical journey was someone cold calling and saying, hey, do you want a loan? I think the same thing people have experienced. Do you want an insurance? But, and the reaction that generates. But when someone is going through a transaction, and I gave it the example of Samsung and the purchase of a phone, which can be fairly expensive, but the same can be extended to many other customer transactions. The booking of a vacation, Sachin alluded to it, which also introduces certain risks at that time around travel, flight delays, missed connections, so on and so forth, cancellations. And the opportunity to just sensitize the customer that, hey, a risk arises with this transaction is very good, when it's presented at the time of the customer transaction. So the embedding the risk, the presentation of the risk, its awareness of the risk, and then an option to add it, coverage for that very seamlessly, very frictionlessly, as we've all been speaking about. Like Andreas was saying, through a set of APIs, we can exchange information with ecosystem about the transaction, whether it's a single trip journey, it's a, what duration it is, so on and so forth, what phone make model there is, what kind of lock there is, what kind of finance. Even there's discussion around finance, embedding insurance into BNPL as well. So depending on the duration of the finance taken, the ticket size of the finance taken, through exchange of data through APIs, we can render an appropriate quote, choice to the customer that, hey, with a single tick box, you can add on coverage. And it's not a humongous journey of filling forms, etc., because you can lean on the all the data, KYC data that the partner ecosystem has already gathered, and exchange that and issue the coverage.
Yeah.
And the whole insurance exchange that we are building is about matching this demand and supply. So the moment a transaction happens, it creates a risk. There's potential for demand. Matching that demand with the supply from our insurance carrier partners, so the right product is available, right price, right structure. That's what we are building.
Yeah. And
that's the journey which makes it very easy for the customer. They don't have to go through filling forms, a cold call dissociated journey, but rather a seamless experience.
Yeah. And like you said, the right product, the right price, the right time. And that sort of the extension of that is that it's the correct product and the correct, so you're not mis-selling something, that you're not overselling or unnecessarily upselling a product, when and it's something that a customer actually needs and can use.
I think that, and just one comment to this one. I think what Rohit was saying on a seamless user experience, which is very interesting. We've been actually experimenting within Thought Machine on user experiences where basically we think that people are not interested into products anymore. Basically, they want to see account statements and balances and transactions. So it does not matter to them whether they have a current account, a savings account, buy now, pay later account, a loan account. They would want to see everything consolidated as a single statement in a transactional view. And I think that is where the future would be.
Good. I'll just remind panelists, if you've got any participants, if you've got any questions to ping the panel through the Q&A function on the webinar. All of those questions about that we talked about then, that Rohit was talking about, the right price and the right time and everything, brings me to a regulation point. And maybe Sachin, being in a bank, everything is regulated. You have to make sure that you meet the regulatory rules and liaise with regulators and so on. So I wonder if you could talk to us about that a little bit, and also, making sure that you have the right partner. That how do you choose the right partner so that you're working with the right person, the right team, that make sure that you don't fall foul of any regulatory hurdles.
Yeah, and that's a really good question and a very important one. And let me take some time to kind of just elaborate on how the regulatory landscape is today and how we engaging with regulators, right? So if you look at this partner-based banking regulation, other than open banking in the UK and PSD2 in EU, which are kind of well established now for a few years, the other regulators are still kind of figuring this out from an actual policy point of view, right? But at the same time, most regulators are open to innovation. Most regulators kind of understand that they are, the customer preferences are changing. Banks are trying to innovate, and they don't want to suppress that innovation. So our experience has been as follows, right? When we go to a market where there is a large unbanked population, the first thing that strikes the regulator is that this kind of a partnership can really drive our agenda to get more people into the mainstream banking system, because banks are not ready to go to certain segments simply because of profitability. But if they do embedded financial services with partners, then that problem of profitability can potentially get solved. And therefore, the unbanked population can really benefit from it. So that's one thing that really drives the regulator, and they look at it very positively. The second thing that they look at, and again, it's been a very positive experience for us, is that, hey, you know what? There is innovation which is happening, but a lot of financial innovation seems to be happening by unregulated entities. So you have, retail ecosystems getting into payments, some of them coming up with lending products, etc. So the moment you have a regulated entity like a bank or an insurance company, or in case of insurance or even brokers, that's where the regulator is comfortable, because there are well-established processes around this entity. There is governance, there are audits, and that's again something from a business model point of view that regulators are quite happy to support, right? But having said that, there is a whole lot of new technology which is getting created. There's in the partnerships, the user journeys are, to make them friction free. There is a lot of work that the partner does with the bank or with the insurance companies, and those are the things that the regulators are very keen on ensuring that we get right. And we are not exposing the customers or even the bank or the insurance company to unnecessary incremental risks. So that has been our experience. But overall, I think whether it's Asia, whether it's the EU or the US or the UK, regulators are fairly open to seeing how this space evolves, because of the benefits that I outlined.
Yeah, that's good. So the sense I get, sorry, go ahead, Rohit.
If I may add a perspective, I think Sachin already alluded to it. From an insurance perspective, what Bolttech brings to the table is not just the technology, the platform, and the product design capability. More often than not in markets, we will have a brokerage or an agent or a MGA kind of license. And we engage with the regulators on a regular basis, periodic basis, to make sure they are comfortable that the way we are designing the products, be it bespoke, the way we are or standard, the way we are designing journeys, and the way data is being transferred between ecosystems, use of APIs, it's compliant to not just insurance laws, but data protection, so on and so forth. So yeah, I think engaging the right partner who can bring regulatory compliance is key, and I think platforms that can address that, will always have a leg up.
And I think I like Sachin's point there before, and I think we talked about it. But in general, regulators have been quite pragmatic about the new technology, and okay, let's try things out and see if they work, and then if it does, then we scale, and if it doesn't, then okay, we kibosh it. In
Asia, yes, specifically yes, because as Andreas was mentioning, right, this area is very, Asia is very underpenetrated. So the regulators are keen that this innovation, if it can help bring, access to financial products to underrepresented segments. Yeah, okay. They encourage it.
We've got 5 minutes left, so I want to talk about the future a bit before we go. And I guess Andreas talked about it at the start, about hyper personalizing services and really tailored using data, and of course APIs naturally. And Andreas, you talked about Treasury as a service and HR schemes. But do we think one of the other use cases I think is for SMEs is around perhaps having payments made from your accounting system, these types of things. And I mean, how far away from these solutions are we? Is it a 5-year thing, or is this a 10-year prospect, or what do we think?
I think it's difficult to predict. So I think the issue that we have is that what Sachin was alluding to as well is that traditional banks typically would wait and see when, if and how innovation is going to happen in that space, potentially through like fintechs and other providers. And if there is like a market demand enough, they would then basically tap into that kind of like segment. So I think we probably optimistic. I'm an optimist by nature, so I would hope that this kind of like development is going to happen within the next 5 years. But realistically, we probably have to see where we are in that regard.
And that development, I'll ask Rohit and Sachin. Rohit being essentially a more recent startup, and Rohit being from a bank. Who do you think's winning the battle between sort of banks and the new startups, or is there room for everyone to play in the embedded finance world? So maybe Rohit, do you want to start?
In the embedded insurance space, as I mentioned, the numbers speak for themselves. At the moment, the market scale is still a fraction, right, at $150 billion, but expected to grow to $750 billion in premium by 2030. Now, this has the tailwinds behind this is also by the incumbents, the insurers. They know that the consumer experience is itself beneficial, and the attachment rates, etc., that can be achieved by embedding insurance into ecosystems and journeys can be significant. So I think the way this is evolving, we know which direction this is going. The traditional channels also are starting to understand the significance of this and adopting to it.
Right. So there's room for everyone to play.
Yes. Absolutely. I mean, there will always be, standalone, large ticket, lifestyles, stage planning products, etc. Yeah. But embedded insurance, creates an opportunity for bespoke, tailored risk, which were probably underinsured in the past.
Right. And Sachin, we've got 2 minutes left, so if you want to comment for a minute on that, and then I'll wrap up.
Yeah, I think so very, very simply, right? I mean, if you look at Bolttech is a really great example of how a fintech has scaled really, really very well, right? But for every one great example, there are 100 which haven't scaled very well. You don't even know of them anymore, right? I don't think it's a either or situation. There will be some fintech players who will do very well. They will scale very well. They will execute really good, and the same will happen with banks. Some will kind of figure this out and really capture the opportunity, and some will unfortunately have to take difficult decisions of exiting certain markets, certain client segments, because they did not react fast enough. But overall, it's good for the consumer, right? Whether you're getting the right experience from the fintech or from the banks, it's great for consumers.
Yeah, I think that's a good way to end. We've got 1 minute to go, so that's a good way to end. That it's a good result for consumers, and I think the key takeaways for me from today's discussion is really around profitability. I think that's an important point for all of the players involved. That profitability has to remain. It remains fundamental to providing the services, and that the integration of APIs and open banking is the way to do this. So we're out of time now. So that's thank you, Andreas, Sachin, and Rohit for joining. Thanks for your time. I think we've had a great discussion this morning. As I said at the beginning, the panel has been recorded, so we'll post that out via email to everyone who's signed up. You can go through this again at your leisure. If you have any questions, please feel free to ping any of us on via email, or we're all on LinkedIn. So feel free to join us there, to contact us there. You can also keep an eye out for the white paper which Capronation and Thought Machine are releasing in a few days. That'll be on our website, Capronation's website, and also you should get an email about that if you haven't already signed up for our newsletter. If you haven't signed up for our newsletter, please do, and you'll get that. And so once again, from Capronation and Thought Machine, I thank you for joining us today. I hope you found this interesting, and that concludes the panel today. So I'll end the call now and say have a good day.